Welcome back into another new session with me, Geetu. So, we have started in our last session the third chapter of business studies, that is private, public, and global enterprises. So, what are the previous session? We have completed departmental undertakings, features, merits, and demerits. So, again, I'm going to write down how many questions, what are the markers of every question. So, as I've already told you, departmental undertaking is very important, statutory cooperation is very important. Then again, governmental companies are very important. So, all this will come for 8/4 marks. Either it would come as section D question or it can come as section C question. So, you have the second topic, changing role of public sector, which would come as a 4 marker or may come as an 8 marker. Okay, then you have the global and global enterprises features, which usually comes as an 8 marker, and joint venture merits comes as a 4 marker. So when you talk about this particular chapter, this chapter is important, especially these topics are very important because I've usually seen these topics being repeated, and it's pretty simple. So in our last session, we completed departmental undertaking. We had completed departmental undertaking. Today we will be completing statutory cooperation and governmental companies. Okay, exactly do you understand by statutory cooperation? Now, these are again public enterprises which is brought into existence by a special act of the parliament. Okay, the parliament is again the government, and the act, you know, right? You have the 1956 governmental act, you have the companies act of 2013, you have your joint stock company act. Like that, you have your partnership act of 1932. Like that, we all have that there are several acts of the parliament or the government. Like that, this statutory cooperation has a complete act which is set by the parliament. Okay, and this act a lot of power. It defines a lot of functions, rules, regulations that's governing the employees in the relationship to the government departments. Okay, so this statutory cooperation, you need to remember there is a separate act in the parliament legislative which is passed on for this particular let's say organization or cooperation. Okay, so it's very important for you to understand that. I'm going to highlight it here itself, okay, because I'm not able to underline it below. Now, is the meaning, or what exactly do you understand by statutory cooperation? Now, statutory cooperation, as I told you, it is a corporate body. That is, it's a separate body which is being created by the government, by the, let's say, parliament. Okay, it defines a lot of power, it defines a lot of functions, and it is financially independent. Like the departmental undertaking, it is not dependent, it is financially independent, okay, in taking its own decisions, and it doesn't need the help of anybody else, because here the people who function are the state government. Okay, like if you talk about the departmental undertaking, I told you that this is your central government, below inside that you have your state government, inside that you have a department of ministry, but here this is your statutory cooperation, your state government. Okay, so your state government, the government there has certain rules and regulations where it is autonomous body, it's an independent body, it doesn't need the help of anyone, but definitely it comes under the power of the central government or the higher government or the parliament. Okay, so it's a corporate person, it's a corporate body, it has its own name. Like the examples, we have your life insurance of India, unit trust of India, food corporation of India, industrial finance corporation of India. So you see all this shows India, 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 but all these are statutory corporations, so you need to learn at least 2 or 3 examples. Okay, so all these are coming under the governmental control, but They are a corporate body. Corporate body means what? It's an independent body. It has its own financial independence. It has its own powers, functions. It doesn't have to really consult for certain things. It can actually work on its own. Okay. So the what are the merits? We'll be looking into the merits, we'll be looking into the demerits as well as the features. Like as I told you, the important terminologies are very important. With the help of important terminologies, we are good to go with the writing and the explanation. So the first thing that we actually looked into the meaning was it enjoys independence. It has its own freedom to function as its own, as an autonomy body. It doesn't have to depend on anyone. Yes, its rules and regulations here and there has to come from the central government or from the parliament, but still it has its own freedom to take in certain operational flexibility or decisions. Okay, it's not totally dependent on the central government. Okay, then the second one is the budget, the income. Okay, it earns its own budget, it earns its own income. Every state government, like let's say Karnataka, Tamil Nadu, Andhra Pradesh, all these state governments has its own budget, has its own income that's coming from all the department ministries and all the other functions. So there is a lot of money that they are earning by themselves, and the central government will not put in their head into these statutory corporations. Why? Because it is a state by its own, it has its own policies, it has its own procedures. Why? Because it works as an autonomy organization or an autonomy body. Autonomy or autonomous refers to it has its own rules, it has its own regulations, it is a single independent body. Autonomy, again, autonomous refers to it works as an independent body, it works as an independent organization. It does not really bother about rules and regulations which others are following, but it follows its own rules and own regulations. And it has the acts which it has a government act which it monitors, like let's say the companies act, or let's say the companies act, or whatever act it has pertaining to several issues, like the act of 2013, the act of 1956. Whichever act it pertains to, it works as an independent body by itself. Then the main instrument for economic development means every state thinks about its own development. Like you talk about Andhra Pradesh, the road and the travel services, the transport services are so excellent, it's really good. So what are they saying? The highways, the national highways are really excellently well built. Okay, everybody would really love to travel on those roads. Why? Because the government, the particular state government, has invested so much of money that whoever transportation should be very easy. It should not be that the roads are bad and you're paying the tax for the roads and then you really don't want to travel on those roads. So what is it? It leads to the economic development of the entire state, the entire government. Okay, so the entire statutory cooperation works towards the benefit of economic development, keeping the customers happy and making sure that the economy is growing as well. So these are the four merits of statutory. Now, coming down to the demerits of statutory cooperation. So, as I told you, it does enjoy a lot of its operational flexibility, but still, there are certain rules and regulations which comes from the central government. Why? Because these people are also earning a lot of money. Since they are earning a lot of money, some amount of money needs to go back to the central government so that the central government will know, or the central government will have an eye on how much money these people are actually earning, every state is earning. So again, the big picture, as I told you, easy to learn. You have the central government here. Okay, within the central government you have the state government. So every state government earns a lot of money. The central government wants to know how much money the state government is actually earning. okay, through different things. That's the finance department, you have the educational department, you have the tourism, travel and tourism, you have the health department, you have so many departments, or you have all these departments are in one state. Every state has various departments, so every department is earning money, which is again going back to the state government. So this state government is rich. Yes. So, what is happening? It does enjoy a lot of freedom by itself, but certain things here and there, the government and the political interference will definitely take place when there is a lot of money that's going to be involved. Example, let's say if you go to, like, let's say Hyderabad or Telangana, there's lot of these flyovers that is being constructed everywhere possible, flyovers that's been constructed everywhere possible. So what is happening, there's a lot of money, there's a lot of budget that's been involved. So what is happening, the state government here, the Andhra Pradesh, let's say the Andhra Pradesh state has to give an account of how much money that they are incurring and they are spending. They have to give all this account to the government, to the central government. So there's a lot of political interference when it comes to huge funds that is being involved. Okay. Third point is there is a lot of corruption when it comes to the public. Why there is corruption? Definitely, when there is a lot of money that they are earning, people will also get, employees will definitely want to think of different manners in which they can earn money from the public. So definitely corruption is there. And the government has a practice of appointing advisories to the corporation board. That is, which government are we talking about? We are talking about the central government here. So this government will appoint employees to the state government. So anytime, even if the state government wants to keep certain transactions as a secret, these employees would definitely leak the secret to the central government. Why? Because the heads in the state government, the heads in these departments are the people from the government corporation board. Okay. So it cuts down the real freedom of the statutory corporation. If they want to enter into really good contracts with other organizations, then they cannot do it so easily, because they have to take down the consent of the central government. And if there is anything that they want to do, if they want to take in any decisions, again, yeah, they have to take in the consent of the central government, which leads to further delays. So all these are the points, or all these are the demerits which is affecting the state statutory cooperation. Now, to the features of statutory cooperation. Now, as we have learned all these things, very simple, we'll learn the merits, we'll learn the demerits, all these put together with the meaning is what we would be talking about in the features. So, as I told you already, it is set up by the Special Act of the Parliament. This act defines the powers, the functions, the privileges of how a statutory cooperation can function. And it's wholly owned by the state. Why? Because this is central government. Let's say this is Delhi government, our parliament. This is your state government. Our state government is Karnataka. So the entire state is getting owned by our our chief ministers. And what is happening, they are financially responsible and they have a lot of power, they have a lot of profits. So either they can make the state really good, that is, either they can move the state towards a lot of good things, providing a lot of good things, or they can rob it of a lot of money, and our entire state can undergo a lot of crisis. So our statutory corporation, I told you, it's a corporate body, it's an independent body. So definitely it has a separate legal entity. That means the state is considered to be a separate entity. So this separate entity can sue refers to it can file a case, and someone else can file a case on our government. So it can buy property, it can sell property. Sue is nothing but you can file a case. Be sued is nothing but the government can be sued. The government can be, someone else can file a case on our government. So they can acquire property, they can buy properties, they can sell properties in the name of our Karnataka government. Okay, so there is independency, all their finance is independently managed by the state government, but definitely when it comes to huge funds there is interference by the central government. Okay, so these are the features again. Okay, not a complicate you, just remember central government parliament refers to the head, your state government refers to that's coming under within your country, every state. Okay, and your departments come within your state government. So whatever revenue is that the departments are earning will again go back to the state government, and a portion of that has to be submitted to the central government. Yes. So the next topic that we're going to be looking government companies. Now, what are the topics we're going to be learning into government companies? We're going to be learning again the same. That's the meaning, okay, features, advantages, and disadvantages. Okay. Now, these government companies is not the central government companies what we are talking about, but the central government. That means, as I told you here, again, big picture. We'll go back to this is our central government. Okay, this is Delhi, this is your state government, this is Karnataka. Okay, and within this you have your department of ministry. So this I'm going to write is department of ministry. Okay, so now we have looked into department of ministry, we have looked into your state government. Now we will look into government companies, but we are not talking about the central government here. We are talking about those companies, like every state will have government companies. So I'm going to mark it here like this. Okay, every state is going to have central government companies. Now this central government here will invest money into these government companies. So this central government is going to invest money into these, what am I talking, into these government companies. So like that, in if you're talking about let's say Karnataka, India, you have BEMEL, you have HAL, you have MTNL, you have Doordarshan, Bharat Petroleum, not Doordarshan, Bharat Petroleum. All these are government companies. Now, when do you call it a government company? A government company when 51% of the paid up capital, share capital, is held by the central government. So, if this is a government company, there is 100% share capital here. 100% shares can be bought by the public. In this 100%, what is happening? 51% of the share capital. Shares means you know, right? Shares is nothing but the public will invest its money, the public will invest its saving into this government companies, into these companies like HAL, BEMEL, all these companies. So 51% of the share capital is bought by the central government here. So the remaining 49% of the share capital is bought by the public here. So any company, if you know that 51%, this is very important, okay? So make sure you're making note of. So if 51% in any company is bought by the government, that itself makes it a government company. Okay. Itself makes it a government company. So there is state government interference, there is the central government interference. What are the examples? We already looked into the examples. Now, as I already told you, 51% of the paid up share capital needs to be bought by the government, that's held by the central government, okay, or the state government, or jointly by both. Okay, but just remember, if it is a company, in that company, if you see 51% of the shares that's been bought by the public, then it is called as a government company. And the second thing is, the government company is established under the Companies Act of 2013. So I told you, no, there is special acts in the parliament. So this government company is coming under the act or Companies Act of 2013. Okay. And the shares of the company are purchased in the name of the President of India. So that 51% of the shares of this all these companies I told you is bought by the government of India. So 51% of shares which is bought in all these companies gets bought in the name of whom? In the name of President of India. Okay. And example, what are the examples? Steel Authority of India, Hindustan Aeronautical Limited, then you have BEMEL, you have BHEL, NTPAC, then Bharat Petroleum. All these are companies where the shares are bought by the government, and the government shares are bought in the name of President of India. Down into the features. See, all these are simple things. Please make sure you're making note of them. The moving on to the features of government companies, make note, like I'm saying, make note of all the important terminologies. Learn only these important terminologies. It's good for you. It's easy for you to learn the terminologies, and it's easy for you to write your paper as well. So when we're talking about the features, as I told you already, it's coming under the Company Act of 2013. It is also coming from the Companies Act of 2013, as well as originally it was formed under the Companies Act of 1956. Now, you will actually be wondering, why am I stating two acts? Please understand, first there was an act of 1956 which came into formation, but then in 2013 there was a lot of changes which was made into the act, so the changes cannot be made into the Indian Company Act of 1956, because when the act originated, there were only certain things that could be added to the act. But after that, there were a lot of changes which were happening in the companies, and because of that, they created a new act, that is the Indian Companies Act of 2013. Lot of changes could not be added into the 56 act, so that is the reason they came up with the new Companies Act of 2013. Now the second point is, this government companies are can file a case by the court of law. They can be sued, and the third parties can also sue these particular companies, even though they are government companies, and they can buy property, they can sell property in their own name. They have separate legal entity. See, all these are terms which has already been marked, so I'm not going to go ahead and further mark it down. Okay, you need to go ahead and highlight it into your particular notes or your particular text. Okay, then the management of these companies are all government servants, or they may also be other people who have been taken into the organization, but definitely they will be given a lot of let's say privileges by the government, because they're working for these government companies. If you actually see, a lot of your grandparents in those days were working for this BEMEL or HAL, or for this Hindustan Aeronautical Limited or Bharat Petroleum, and you would see that they have standardized shifts in these companies, uh, proper bonus facilities, and proper salary that is being provided to them. And after a certain grade, or after a certain level that they attain, they become central government employees. They get paid by the central government. So until a certain stage, they get the salary of the state government, but after they get that particular position or the particular grade, they get the money, or let's say the salary that gets paid by the central government. Okay, so the auditing, the accounting procedure, their filing of reports, all the procedures, everything is being handed, or everything is managed by the central government. Okay, so there's no independency that can be taken by these government companies, because there's interference of the government. Okay, and these annual reports needs to be presented in the parliament, and these government companies, they can obtain their funds from the government, from the public, from the private shareholders, but just think that 51% of the share capital needs to be held in the name of the government. Okay, so these are the features of the government companies, and this topic will be merits of government companies. Like I already told you, it has a special act in the parliament, that is, it's established under the Companies Act of 2013, and it's coming under the Act of 1956, and it Then demerits, the first one is it's established by fulfilling the requirements of the Indian Company Act of 2013 and the 1956 Act. So there is no new act that is coming into existence. It has separate legal entity. That means the company is treated separate, the government, the employees are treated separate, the shareholders are treated separate. So in case when the company ends up having a loss, then the personal assets and the business assets of the company will be sold, but in case of the employees, only their business assets will be sold. That is the meaning of separate legal entity. It can buy properties, it can buy, let's say, it can buy a lot of property, it can be sued, people can sue it. So all the, it can sue people. So all this is what relates to separate legal entity. Then it enjoys autonomy in all management decisions. That means what? All the decisions that is being taken by the government company, the company itself, that's the government itself, can take all the decisions as a single handed. It doesn't have to take the help of the government. And these companies, by providing goods and services at reasonable prices, they provide, or they definitely manufacture a lot of goods and services. So all these goods and services are provided at reasonable prices, and whatever malpractices are there, whatever unhealthy business practices are there, it cuts down or it curbs down all these things. So these are the merits of your. Then when it comes to the demerits, the 51% of the share capital is held by the government. Okay, so that itself shows it's a disadvantage. Why disadvantage? Because the entire, let's say, the entire decisions will be taken care by the government itself. Merits of government companies. The first one is the government is the main shareholder. As I told you, 51% of the shares is held by the government companies. So that itself is a major disadvantage. So the decisions, the main decisions, will be lying in the hands of the government. So anytime when there is when there's corruption, there definitely the government will be ensuring that they would be the main ones to take the decisions. So there is no freedom that's been given to the remaining 49% of the shares that's been held by the public, as well as the companies, to do what they want to do. It also weighs the constitutional responsibility which a company financed by the government should have. It is not answerable directly to the parliament. So, what are they saying? These companies can do what they want to do. Reason because at the end of the day, they are not directly answerable to the parliament. These are the companies, like you talk about HAL, you talk about BEMEL. These companies are making products which is serving or which is good for the country. Okay, so that's the reason the government is invested 51% of the shares. But still, the company can do what they want to do. So there will be a quarrel between the government and quarrel between the companies, because the companies would say this is what is good for the country, or this is what needs to be done. But the government would say no, we have invested money, we are funding you, so you all need to do this. So there will be a lot of political disturbances when it comes to the government companies. Then the shareholders, since the government is the sole shareholders here, probably the maximum shareholders here, definitely the management, the administration, the way the companies have to function, everything will get affected. Reason because the government is the maximum shareholder. So when it's the board of directors meeting, when it is coming into the decision making power, these the government, I'm talking about the central government, will definitely interfere into these companies. So these are the demerits of government companies. Coming down to the conclusion of our statutory cooperation and our government companies, please understand these two topics are very important. Statutory cooperation refers to your state government. As an example, I'm telling you how to remember the answer. And your government companies refers to companies where the central government has invested 51% of their share capital in the name of President of India. So a lot of their interference, a lot of the administration will be taking place by the central government into these government companies. So any doubts you have, any questions you have, please let me know. Please send a message, leave a comment in the comment box. Please like, please subscribe, and share the videos to all your friends so that it can help the others also to learn. Okay, so thank you so much and stay tuned.